arkets have been bracing for what investors could view as alarming results out of 2 U.S. Senate runoff elections in Georgia. Democrats already appear to have won one seat, with Democrat Rev. Raphael Warnock defeating incumbent Senator Kelly Loeffler. If they take both, giving Vice President-elect Kamala Harris a tie-breaking vote and Democrats' control of the Senate, it could get ugly, albeit briefly. That's because most equity investors haven't seriously considered the impact on taxes, new regulations and more of unified Democratic control since just before the November presidential election, which, of course, failed to produce a much hyped and anticipated blue wave. The result is that a surprise Democratic double win could spark a sharp short-term sell-off of as much as 10%, Oppenheimer chief investment strategist John Stoltzfus predicted before Election Day. And then, investors will get over their shock and start licking their lips over all that stimulus, including $2,000 a person checks and infrastructure spending, that Democrats promised to pump into the economy. If Democrats win both seats, there will be a short-term negative reaction on Wall Street, but it will come back because we'll see more spending pretty quickly, says famous bull Jeremy Siegel, the Russell E. Palmer Professor of Finance at the Wharton School of the University of Pennsylvania. Make no mistake, based solely on historical market performance, the best-case scenario for investors appears to be if the GOP retains at least one seat in control of the Senate. If Republican Senator David Perdue manages to hold onto his seat, right now, Democrat challenger John Ossoff holds a razor-thin lead, it sets the stage for a split Congress under a Democratic White House. There's only been one period since 1944 with a Democrat in the White House and a split Congress, and the S&P 500 averaged a hefty 13.6% return each of those years, which just happened to be the 4 years during the middle of President Obama's tenure. By comparison, during the 10 years a Republican president held office with a split Congress, including, of course, the last 2 under President Trump, the market only rose by an average of 7.3%. Interestingly, the second-best performance, a 13% average gain, has come during the 10 post-1944 years when a Democratic president had to contend with both the House and Senate under Republican control. The market appears to like its Democratic government handcuffed, says Doug Witte, a finance professor at Missouri State University. But it turns out that even if Ossoff, as well as Warnock, pulls off an upset, investors should be okay. Going by historical data, the popular belief that unfettered Democrats are terrible for stocks simply isn't true in the long run.